Sometimes you do want to roll it into and continue, but I've got plenty of real estate. I want to also live and enjoy my house and do what I want.
What would you say has been the biggest frustration for you or your clients or friends or family when it comes to the 1031 exchange? And then we'll talk about some creative ways to get around that.
We've been pretty fortunate. Most of ours have gone pretty well as far as we got some good 1031 facilitators. But for me, the biggest thing was sometimes I don't want to roll it to an investment. I didn't want to this time. We have a personal major project on a home that we are doing this old historic house redo. And we have a second home in Natchez, Mississippi, that is getting a 225-year-old house, getting a major redo as well. And of course, property values being what they are in Mississippi, there's going to be a shortfall between what the construction loan is and what we want done over there. And I said, sometimes I don't want another investment property right now. I want to finish our two houses. I want to do what I want to do with my money. That's the problem for me with, sometimes you do want to roll it into and continue, but I've got plenty of real estate. I want to also live and enjoy my house and do what I want. So what we came up with to be able to do it is I've been listening to a lot of podcasts such as yours, wonderful episodes out there. And one of the things I came across was the cost segregation study. So we are doing, matter of fact, I need to get them ordered ASAP. We are doing cost segregation studies. Remember the two properties I talked to you that we bought, the $1,025,000 and the $595,000? I didn't even mention the really cool thing about those is the down payments for those two properties came from me selling some of my EXP stock. So that was a nice little bonus. I really loved that. So yeah, we wanted to be able to do what we wanted to do with it. So with a cost segregation study, they basically come in and say, well, short-term rentals are not even on the 27.5-year depreciation schedule. They're on the 39-year, unlike long-term rentals. So you take the price of the house, with the land off. So if it's $595,000, let's say it's $495,000 roughly. So let's say $500,000. Let's say that's what they would give it. They says a lot of things in there, like your refrigerator, your air conditioning, a lot of things are not going to last 39 years and the government knows it. So they allow you to put it on shorter schedules, 15, 10, much shorter schedules. What they're doing right now is if you have a cost segregation study and they come in, they line item out the things that are going to be on that 15-year or less schedule. And they said, typically it comes out to be around 30%. So it's probably on that $500,000 building, it's probably going to be roughly, give or take, $150,000 that we can write off. Now, the beauty is this year, bonus depreciation is allowing you to do 100% in 2022. And in 2023, it'll be 80% of that amount, then down 60, 40, and so on. But as of right now, you can take 100% of that loss. So think about the $1 million property. That's going to be probably a $300,000 or close to it negative that we can take. And then you've got your, 8582 form that rolls over your losses from the past. So when you add up the losses we're carrying forward, plus the cost segregation studies we're going to do on the two other properties that we own, that is going to offset most, if not all, of the gain on this particular property. And we'll have a very small amount that we'll have to pay, and we can use it for what we want.
Amazing. Yeah, that's one of the most advantageous, Capital Gains Tax Solutions solution, which is the cost seg and the bonus depreciation. And you're right, it is 100% this year. Next year it's 80, and it goes down a little bit. But in the meantime, invest right now if you can find a deal that makes sense. Don't let the tax tail wag the investment dog. Yeah. Make sure it makes sense, and or take your existing portfolio that you haven't done, maybe just some straight line depreciation, and go ahead and do that cost segregation study while you have the advantage of this, and then you can always roll forward the additional loss. And so that is such an amazing solution. Now, there's also another one, Tammy, I'd like to unpack with you a little bit more too. And it's called a deferred sales trust. Most real estate professionals and or even commercial real estate professionals, they had never heard of this, right? And it works for business sales and cryptocurrency. It works for stock sales, right? So if you had highly appreciated public stock like EXP stock, and you're looking at a way to defer capital gains tax, the 1031 exchange doesn't work for those other assets or even cryptocurrency. But you can use this deferred sales trust to exit and become a lender to this trust. And in other words, it's a seller carryback. It's a creative way to exit without having to carry back for the ultimate buyer who may or may not be, credit worthy or may not take care of the property to foreclose on. So your collateral can be secured against other assets, passive or active real estate. You can be in the stock market, you can be in crypto, and you can diversify. You keep the funds liquid in that you might want to spend it for some personal, needs as things come up. There's so many cool things that come to this. So I'm curious, had you heard about this before, Tammy, the Deferred Sales Trust? And if so, what are your thoughts on it?
It's hilarious. The first time I ever heard about it was at the Build conference. I had not heard about it. So I'm so excited to dive into it deeper. Whoever the gentleman that I talked to about for a few minutes with it made some great points, but I said, I've got to dig deeper in this. This is amazing. Because I tell you what, for the first time ever, I think too many people try to punt all of their tax questions and issues and just not think, oh, my CPA will handle it. I continually upgrade my CPA all the time. And I still look at no one knows your business like you. And this year, for the first time, we had to write a $1 million tax bill to Uncle Sam. The first time you ever pay Uncle Sam $1 million, I said, this has just become 25% of my job. This is now part of my stinking job because I don't mind paying my fair share. But what keeps me up at night is thinking I didn't know about one of these great things like you're talking about, and I threw away money I didn't need to. So I would love to hear more about that.
Absolutely. And for anyone who wants to learn more about that, you go to capitalgainstaxsolutions.com. We want to invite you to our free masterminds every Friday at 10 a.m. Pacific Standard Time. We're breaking down the deal close story of the week. We're sharing you how to save a failed 1031 exchange and really just dive in to see if the Deferred Sales Trust could be a great fit for you. We also have the new book coming out called Building a Tax Deferred Exit Strategy.
Wow.
And it's our proven playbook for unlocking your wealth plan for yourself and for your clients using the Deferred Sales Trust, and also some other stuff like cost seg and some 1031 exchanges. But you can go to Amazon and check out that book.